Hello, everybody. This is the Equity Management Academy Weekend Podcast for September 17th, 2021. Gold. A 20% price gain from the current seasonal lows possible into early 2021. Summary. Retail sales numbers unexpectedly jumped in a sign of a resilient economy which triggered a move down in gold. Fundamental data continues to make the market nervous since such fundamentals continue to be mixed. Precious metals have been in a corrective pattern since last year. Physical gold and silver are in short supply and demand high. Fundamentals. Gold is in a fast market to the downside. Retail sales numbers unexpectedly jumped in a sign of a resilient economy which triggered a move down in gold. Fundamental data continues to make the market nervous since such fundamentals continue to be mixed. The fundamentals do not appear to apply to the precious metals markets. Precious metals have been in a corrective pattern since last year. Physical gold and silver are in short supply and demand is high. The Variable Changing Price Momentum Indicator, VCPMI, annual analysis predicted a rally of about $30 to $40 to close above 1810 as we published in Seeking Alpha, September 12, 2021. Quote, the market came down to the annual SMA of 1771 and reverted to close above the annual mean of 1810. It is still within a range to complete the annual pattern a week earlier or a week later. The initial confirmation that this bottom is in place is a rally from current levels of about $30 $40 initially, or a close above 1810, activating the annual targets of 2164 to 2442. A test of the resistance at these levels into September 14th, 15th of this month, and subsequently a retest of the current lows into the 28th of this month would be a perfect picture for the next 2021-2022 annual bottom pattern to be completed for our next calendar year beginning September 28, 2021 to September 28, 2022. 1791 was the buy trigger and 1810 is the target and is the annual average. We have been trading in that range and have been pretty choppy. If gold closes above 1810, then we are looking at targets of 2164 to 2442. On September 14th, gold hit 1810 and entered a strong area of resistance, according to the VCPMI. There is a strong likelihood that sellers will come into the market at that level. And then it closed below 1810 and activated a bearish signal on the 15th. It came down to complete the extreme below the mean on the daily and test the buy 2 level of support. If we get a confirmation of a buy signal on a close above 1752, it will activate a buy trigger, which it just did. We are buying gold at this level. There is a 95% chance of a reversion back up from this level. It is not 100% accurate, but it is highly likely and probable. The initial target is 1770. We place a conservative stop at a close below 1752 using the 15-minute bar. The second option is a maximum dollar stop depending on your profile. We use a $1,000 maximum catastrophe stop when we trade. The monthly buy 1 is 1718 and the buy 2 is 1619. The market doesn't have to come down to these levels. They indicate possibilities and probabilities. We could be seeing a bottom formation based on the cyclical patterns. They are levels where you want to accumulate on the long side. The market at this point appears to be extremely oversold. We are below the annual VCPMI average of 1810, the monthly average of 1777, and the weekly average of 1752 is activating a buy trigger at these levels. Many markets are selling off, including digital currencies. Bitcoin is coming down toward the average weekly price of $47,328. Lawmakers are beginning to look into the digital currency markets. The market right now seems to be in the hands of a very few and seems unfair. The only currency that appears to be completely independent and decentralized is Bitcoin. We trade the Grayscale Bitcoin Investment Trust, GBTC, which is a regulated instrument. It offers more safety than some of the plays in digital currencies. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.